Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. I've underplayed this, folks. I'm guilty of this. Paul's been better than me. Wither bonds.
Yeah.
Who are you going to talk to? Kathy Jones leads the way. Wither bonds. I don't know what to do with bonds.
Kathy Jones, Chief Fixed Income Strategist at Charles Schwab. Kathy, again, we're seeing yields tick up here. We got the 10-year Treasury at 4.35%. It seems like the market's backing off on a dovish Federal Reserve. What do you make as you take a look across the fixed income landscape?
Yeah, well, we're in this soft landing, which is unfamiliar turf, right? We're used to being either in big expansion or a big contraction, a lot of volatility in the economy, and we actually are in a pretty good spot here with economic growth, being pretty strong. We came in about 3% last year, which is real GDP growth, which is a surprise to the upside, and continue to see some positive indicators. On the other hand, inflation is coming down. I know we're worried about oil prices today and a number of other things, but in general, the trend in inflation is still lower. So we're in a good spot, and I think that's the market is struggling. What does the Fed do now? We're in a good spot now. Does it need to ease? Does it need to tighten? What do they need to do?
What do not fancy people do? I don't want to talk about spreads and all the other pro stuff you talk about all day, Kathy. But mom and pop out there, they're not going to own NVIDIA. I can't even pronounce it. They're not going to own NVIDIA. They're going to own the Kathy Jones world. Where's the most constructive coupon right now, Kathy Jones, for mere mortals?
Well, I think if you're in the taxable market, investment-grade corporate bonds look good. You're getting yields in the 5% plus area, 5 to 5.5% on investment grade rated companies. And what that means is if you're sitting in cash, a CD, a money market fund or whatever at 5% plus, you don't really want to extend duration and buy a treasury at 430 or 450. You could extend duration and use investment grade corporate bonds and keep your 5% plus coupon. If you're in a high tax bracket, then you can look at munis. The valuations there are pretty stretched right now. This often happens around tax time. People write those checks and they go, "Oh, I need to buy some tax-exempt bonds."
Yep.
But I think when the muni market kind of goes back to a more normal or reverts to a more normal spread, municipal bonds always make sense for people in high tax brackets. It's one of the few places you get that tax-exempt income.
So, Kathy, I was kind of surprised in 2023 to see in the fixed income space the best performance was in the high yield market, and decidedly so. And we're actually even seeing some positive return here in 2024 in the U.S. high yield market. And with all the talk about potential recession here, I'm surprised to see that kind of performance. How do you guys think about the high yield space?
Yeah, high yield has performed very well, more actually stronger than we thought it would. We were more concerned about, caution in the market, but high yield issuers were able to term out their debt, extend that timeline for their debt to not have to refinance yet as much. So we'll see how they do when, we hit more maturities coming up next year at higher rates. But they were able to do that. The economy was more resilient, and there was a lot of funding in the credit markets from the private credit people.
Kathy,
so that's helped a lot.
Market's really moving right now. The VIX over 14, futures negative 15. Kathy, in the yield space, I'm sorry, I got some real movement here. I got a 10-year yield with a 6 basis point pop it on a 4.37%, and the 10-year real yield just moved over 2%, 2.01. Connect the Kathy Jones world to the Liz Ann Saunders world. What does a 2% real yield, inflation-adjusted yield mean for our listeners and viewers?
Well, it should be a competition for riskier asset classes. So when you can lock in a 2% real rate, you don't have to stretch as far in terms of taking risk in other asset classes. Now, that hasn't been the case because we have this kind of ideal world soft landing right now where equities are doing well and risk appetite is still strong, but a 2% real rate should be attractive for the long run.
Kathy's struggling there. She needs some Tang Zero. That's what I would recommend. Kathy Jones, thank you so much with Charles Schwab. Jason Furman has the coolest job in economics, teaching Ec 10 with all the heritage of Otto Eckstein and Martin Feldstein. I mean, Jason, Greg Mankiw, a long time ago, had a BMW with a Massachusetts license plate, Ec 10, EC space 10. Do you have an Ec 10 license plate going right now, Jason?
You know, I can't get one, Tom, because Greg still has that license plate. In fact, I drove with him in that car just last night.
That's great. That's great to know. Our greetings.
Talking about what the Fed was going to do this year.
Our greetings to Greg Mankiw. He's done some fabulous stuff, folks, and I'm going to dig it up, Jason. I'm going to dig up Mankiw's great job of how we're taxed across our lifetimes on income and investment. Jason, there's so little time here to touch upon your path-leading work on the trend of inflation. Is disinflation in place right now?
We've certainly disinflated an awful lot. The problem is there's a big difference between whether inflation is going to settle down at 3.1% and 2.4%, and none of our models are very good at telling us the difference between those two possibilities right now. I'm cautiously optimistic that January and February were blips, that we're going to be in a range that the Fed is going to be okay with, but I'm nervous.
To go to your public service on fiscal affairs and the way you fold in policy like Betsy Stevenson and some others, do you sit in Act 10 lecturing on the interest buildup we now see the government paying? The interest paid by America's 1.x trillion, whatever. Is Jason Furman concerned about fiscal overwhelming our other economics?
Yeah, I taught debt sustainability last week, and here's the tricky thing. There is no doubt that the United States is on an unsustainable course. I think Bloomberg just did an analysis, and I think it was something like 88% of the scenarios, the debt is unsustainable. That seems very plausible to me. Here's the tricky thing. We don't know how urgent this problem is. We don't know how big this problem is. We don't know how much time we have. Now, all that uncertainty is an argument for taking out some insurance. We'd rather not find out what a crisis is like. But I tend to be on the, if we deal with this a couple of years from now, we'll probably be fine. But maybe we need to do better for the United States economy than probably.
So what does this Federal Reserve do just in the near term here, Jason? I mean, we started the year thinking that the Fed would cut perhaps 6 times this year. Now the market's kind of discounting maybe less than 3 times. What do you think the Fed should do, and what do you think they will do?
One thing is, by the way, I was worried that the market was out over its skis, overly enthusiastic, and it's adjusted to a very different outlook without a whole lot of turbulence. And that's been, I think, a good reassuring sign. In terms of what the Fed should do, I mean, it's sort of a standard phrase, but they need to be data dependent. If we get 2 prints that make us realize that January and February really were quirks, I think they could go ahead and cut in June. The other thing, though, I'd like to see them do is make the cut a less momentous event. Rather than, this is a huge ship and it's now going in a different direction, it's going to stay in that different direction. Say, here's what we're doing today, but we're going to continue to collect, data. This is not a promise of that we're on a path of cut at the next meeting, at every meeting, even at every other meeting. They have to make that first move just be less important than, everyone is trying to import meaning into it right now.
Hey, Jason, you look at the U.S. economy, by all measures, doing pretty darn well. But then you look at Europe, you look at Asia, particularly China, not so well. I mean, and a lot of folks talk about the exceptionalism of the U.S. economy. How do you think about that on a global scale?
Look, I'd rather be sitting in our economy right now than any other economy in the world. Absolutely. I think fiscal support has played a role in that. It is, in some sense, fought monetary policy to a draw. The American consumer just never ceases to amaze and surprise me. That's been a big key here. That's something that, by the way, China would be well advised to learn from. If Chinese consumers were just a little bit more American in the way they approach things, China would have fewer problems right now. But, the other thing is these things bounce around. And,
Right.
you don't want to get too cocky because things could reverse a year from now. You just never know.
I'm beyond honored, Jason, to bring this up with you for the first time. The death at 90 years old of Daniel Kahneman. I was so honored to attend a Princeton effort off of Thinking Fast and Slow. Can't say enough about that accessible book. How do you teach, Jason, Kahneman and Tversky in Act 10?
We teach it. I co-teach Act 10 with somebody named David Laibson, who is a behavioral economist. And part of what he's done is take ideas of people like Danny Kahneman and turn it into more rigorous mathematics, as well as more systematically test it empirically. And so we do behavioral economics, I think, in maybe class 3. It's first introduced, and then it's woven in throughout the course.
It has to do with this phrase that the media throws around. Paul and I are as guilty of this as anyone, fighting the last war, like a Fed fighting the last war, and that we're looking at our reflective memories of recent years or even a recent decade. Is this Fed, Jason Furman, fighting the last war?
I don't think so. I think it was when it got behind the curve at the beginning of this, before the tightening cycle began. But it improvised into a whole new place of really dramatically fast rate cuts, doing something that maybe was a couple of wars ago, but not the last war. And now it's in a decently uncharted place as it is preparing for what might be among the first really clear soft landings we've had in the U.S. economy. So this is uncharted ground, and uncharted ground, hopefully in a good way.
Hey, Jason, what do you make of the U.S. labor market here? We get print after print after print of a pretty solid labor market, even though we've got headline and unemployment now up to 3.9%. But boy, it's been really strong over this cycle here. What do you make of it?
One word: immigrants. We are getting a lot more immigrants than we thought we were going to get. That has raised the pace of steady state job growth. And that's why we've had, more than 200,000 jobs a month, while also having an unemployment rate that's stable, if not trending up a little bit.
Jason, thank you so much for joining today. Professor of Economics at Harvard University. Jason Furman, again, with his work on fiscal economics and dovetailing it into our broader lives. Paul, you nailed it there on the job economy, and just percolating in the last couple of days is what Jason Furman was talking about, which is the immigrant overlay is a mystery. And that's we know, but we don't.
Yeah, I mean, my local data point is a buddy of mine owns a restaurant locally in New Jersey, and it's really just in the last 6 to 9 months, he's been fully staffed. It's the first time since the pandemic that he's been fully staffed. Now he's back to like full hours because for a while there, he couldn't staff with the busboys and the waiters and the dishwashers and things like that. Now he's fully staffed, and he's doing more hours, more people employed, he's paying more money in income. So it's interesting to see at the grassroots levels, and some of the economists are now starting to talk about it. But interesting sidebar there.
It's going to be a theme through 2024. Jason Furman there of Harvard. Picking up the torch for Van Eck is Axel Merk with the Van Eck Merk Gold Fund. And we are thrilled Axel Merk could join us today. He's out of Brown University. He's been someone looking at dollar dynamics and gold dynamics, and of course, huge interest now in the moonshot that is gold. Axel, wonderful to have you with us. Just it's a simple start. Who's got the bid on gold? Why is gold moving higher?
That's a great question, and maybe we should ask Richard Russell, the late Richard Russell, who you quoted earlier, to come on. Yeah, unfortunately can't make it anymore. He might have some wisdom to share. I'm just a humble market participant observing. Clearly, central banks have been accredited of being a big buyer. They have been incentivized, so to speak, because their money is at risk in the US. Not that they pile all their money into gold. But other than that, I think part of the reason is geopolitics. I always used to hate citing geopolitics as a reason because geopolitics always abates again and is temporary. But I think we're really out of the peaceful period we've had since World War II and the new era. And then there's some other drivers, but you want to get a word in here.
Okay, but the 8 standard deviation move, Axel, I mean, Paul Sweeney's got 8 questions, but the 8 standard deviation move is the interest payment now that governments are paying on their debt in their annual deficit. I mean, come on, gold is up because finally the interest rate shell game's unraveling, right?
Well, it's the trajectory, and it's both on the fiscal and the monetary side, right? On the fiscal side, I think most people are aware that the deficits are unsustainable. We now have both political parties. They always say the other guys spend it on the wrong stuff, but they're not any better. But the monetary side, everybody's glued on the next rate cut. But what we don't have what economists call a reaction function. What we have is the mood of power. And there, it's okay, he has an easing bias. And not knowing what's going to happen, I think, is also not helpful. It adds volatility to the markets and ultimately does help gold as well. And so we have this somewhat perfect storm here. And of course, one buyer that's been missing in the gold space is the speculator. They're in the meme stocks, they're in the digital assets. And maybe if we see a good move here, they'll come back to gold. And that could, of course, create its own set of dynamics.
So I've heard the argument that maybe countries that are not friends to the U.S., maybe they're diversifying out of the dollar. And if they're diversifying out of the dollar, where do they go? And maybe where they go is gold. Does that make sense to you?
Well, yes, except I think we should be aware that they don't have good alternatives, I think, as everybody agrees. And gold is but one beneficiary. So it's on the margin, gold is a beneficiary. But yes, I mean, if Russia being the most obvious example, but if you hold U.S. assets, they might get seized. But if you're another country that might have plans not consistent with U.S. policy, you also got to think twice about it. Increasingly, countries are more willing to use financial sanctions. And yes, gold is one of the beneficiaries in that. It doesn't mean people can turn their back on the dollar, but it does mean that these countries are looking for ways to diversify.
From your perspective and from your work, what's the highest correlation for gold? If we're trying to get a sense of where gold is going, where do we look? Do we look to the dollar?
It's an excellent question. It's not correlated really to anything in the long run. It does zoom in and out. The one correlation we see most of is the longer term real yields. But as you pointed out earlier in the program, right, real yields have been moving higher. So even that is not consistent. So gold is the saying that where these correlations, they are morphing. They're not. Whenever you think that you figured out something, then you're going to be disappointed that those sort of correlations are breaking down again. It's one reason why it makes it a good diversifier, by the way.
Axel, one more question here, and this goes back to your worries about the U.S. dollar. I mean, they don't seem correlated. They got a resilient dollar right now. Do you still advocate that at some point the dollar will finally give way, what hasn't happened for a decade?
Well, the dollar, we used to talk about the dollar extensively. This wasn't a world where you had some sanity in the rest of the world, but then the Eurozone debt crisis came along and everybody played the same game. And so that it's one of the reasons why gold benefits. And we saw, right, we used to have currency funds, but people turned their back on them. They weren't popular anymore. The only thing people wanted to hear about is gold because it cannot be manipulated. I mean, the whatever it takes Draghi scenario right. is the baseline. And of course, we've talked plenty about what's happening in the U.S., and so, yes, of course, there's a reason for dynamics in currencies, but the gold investor has turned his or her back to currency.
I'll be rude, unlike Paul. Paul's a gentleman. What's your call on gold? Can you give me $3,000 per ounce on gold?
I can give it to you if the speculators jump back in on it, and they have been missing. I don't like it when the speculators come in because that increases volatility substantially, and it can come back. And so I prefer to be the long-term investor, and so I don't like it when gold moves that fast. But at the same time, I think one key reason why gold is moving higher is because of the bias of the Federal Reserve. And the longer this goes with the soft economy, the longer there's a push higher because the the anticipation of a cut is what matters, not the actual cut.
Axel Merk, thank you so much. Merk Investments and the Vanek Merk Gold Fund. Your daily look at the front pages around the world. What do you start with, Lisa?
Let's start off with the story that I actually mentioned in our business news. It's Google. So it's deleting millions of records of user browsing activity. So I wanted to get into this a little bit more.
Oh, is this incognito thing?
Incognito, yes.
Explain
Okay.
this.
It's this class action lawsuit. It says that people were tracked without knowing it on the Chrome browser incognito. The thing with incognito is that it lets users turn off data collection. But the problem is that other Google tools used by websites, by advertising technology, they scooped up that data anyway. So now they're having to delete all this browsing activity. So now they're back in the spotlight again for this.
My basic take is if I go to search for Tigers merch for Michael Barr, a day later, I got 47 ads of baseball merch. That's going to go away?
Well, this is the class action lawsuit. The plaintiffs are asking for $5 billion in damages, but there's no payment for Google. But here's what's going to happen. The individuals who look for those damages, well, they're going to file their own complaints against Google. So this is going to keep happening. People are going to keep filing lawsuits.
Despite the fact that you go in there and you delete all your search history, I just assume it's there.
It's there.
It's there.
I
And
know.
then that's the bargain we made 20 years ago when we started putting all our data online. You give up all that stuff.
Interesting.
Yep.
Next.
Yes. More Gen Z workers are going into skilled trades. So things like plumbing and things like this. Yeah. So younger workers are saying they can get higher pay. They can avoid the rising cost of college because college is just too much for them now. They're saying that generative AI, with the rise of that, blue-collar jobs have more job security. That's another thing they're looking at. They're drawn to the trades because they're entrepreneur potential. Like they want to start their own business. So that's what they're saying. If they get into this, they can do that as well.
Yeah, I think with the rising cost of higher education, I think for a lot of people, it's just not worth it anymore for a lot more people than it used to be.
Can I remember the day Marlboro cigarettes got too expensive? They just, Philip Morris just hit a wall. His college hit a wall. I think they have.
I think they have. I think that business model, I'm going down to Duke next week for a board meeting, and I'll say it again. The business model is simply broken. I think the value proposition for higher education, it's just not there like it was for my generation, certainly for older generations.
Good morning, Chuck Grassley, welder from out in Iowa. I did a welding thing out in Iowa once. I mean, that's what you're talking about.
Yes.
Kids are saying pick up a welding torch or plumbing, right?
Mm-hmm. Correct.
Very cool.
Because, electricians, plumbers, welders, they're starting to retire too, the older electricians. So now there's more room for these. So, and that's driving up the cost of labor. So they're getting paid more.
Can you see me with a welding torch?
That's scary.
Talk about a threat to society.
Oh,
let me do that creme brulee, please. What do you got next?
Okay, this is where I need your help with the pronouncer. Paris's Seine River?
River Seine.
Thank you, River Seine. Is it safe to swim for the athletes in the 2024
They want
Summer
athletes
Olympics?
to swim in the river?
Yes, the river is going to host, at least the plan is, the long distance swimming and the triathlon swim leg. Okay, but the officials, the Wall Street Journal says they're racing to keep the sewage from the waters. This is happening July 26th. And the swimming, it's been banned for like more than a century because of traffic,
I will
sewage.
put out the definitive book on this. Good morning, Elaine Ciolino in Paris. She's with the New York Times. She owns the high ground on this. She traveled the River Seine from in the middle of nowhere in middle France, I don't know, or somewhere near Lyon, who knows. And she traveled the river all the way down to Le Havre, which is on the English Channel. And I'm with you, Lisa. I was there and I just don't get it. They're going to swim in the rivers. That's the latest reporting.
At least that's the plan.
I mean, would you have people swim in the Hudson River here if we had the Olympics? I don't know.
I would say the Hudson, you're doing better than maybe. I'm going to trust Albany and Newburgh a lot more than I'm going to trust. I mean, with Paris, I got this 19th century thing of like leather tanneries, and I'm sure I'm wrong on that, but they're still on for swimming in the river, Lisa?
Yeah, well, last summer it says organizers they had to cancel swimming events that were there as kind of this trial run for the Olympics because the water quality test showed that there was just a high concentration of bacteria. Yeah. That was last summer. So
the river thing aside,
yes.
This Olympics should be epic in Paris, I would think. Tom, you were just there. But
surveillance reporter Katherine
Exactly.
Greifeld's going.
She's going.
She's all equestrian. She's going out to Versailles or somewhere out there.
Okay.
I don't know if she's watching or if she's on the horse.
Okay, we'll figure it out. We'll figure it out.
What else do you have?
And lastly, it could happen. Economy airline tickets are more expensive, but business class seats are getting cheaper. This is from Cirium. They said the average domestic airfare in the U.S. nearly $180 in 2023. That's up 9%, but premium tickets have actually gone down in relative terms. 2023 business class ticket 3% cheaper on average
Paul?
there it was.
I don't know. I mean, all I know is you book the flight, and then if you want like a little bit of legroom, boom, another $100. If you want like to get like a soda, another $100. And so before you know it, your ticket's doubled, and that's how they get you today. A la carte pricing, I think.
A la carte, I agree.
With the bags.
Yeah, so they're pricing, I mean, it's tiered pricing. You get it for Live Nation for tickets, and you get it for airlines. Everybody's figuring out how to
I'm fascinated. Helene
price.
Becker at TD Cowen has been really good on this. There's the Points Guy. Good morning. I was reading the Points Guy yesterday, and I'm beginning to see empty seats in business class. That's
what they're saying, right?
It was sold out, and it's not sold out anymore. There's no question about that.
And they want to bring that those business people, travelers back too. So that's where they come up.
I'll see. The problem is I can't get the Gulfstream anymore.
I know.
Gura showed up.
I know Gura's back, and
first weekend I gotta have it. He's going to some bluegrass festival down south.
Yep.
And I don't know what he's doing.
Do you fly economy? Do you?
Yeah, except when Bob, pays up for when I go down to Nashville to do some offsite. I'm going first class, baby, and going crazy with the Tito's Rocks twist.
My father died, and I had to take the usual father died emergency flight, and I could not fit in the chair. I mean, it was like Fenway Park, It was like Fenway Park just below the grandstand. I literally couldn't fit. I sat up the whole way to Portland, Oregon. The whole way.
Yeah, that's why Tom has to go.
Two seats.
Yeah, and even to be honest, most business classes aren't that good. Good morning, Air France, which does it. All right, that was great. Lisa Mateo, thank you so much. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.